Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Wednesday, the 17th of December, 2025. The market is lower midweek, with Bitcoin trading at $87,197 down 2.6%. Ethereum at $2,950 down 6.1%, and Solana at $128.52 down 3%. Price action remains heavy. Listen for the summary at the end. For now, let's leap in. Bitcoin's decline continues amid year-end profit-taking and elevated fear, yet institutional and policy tailwinds build. Congress introduced the Bitcoin for America Act, which would enable Americans to pay federal taxes in BTC with zero capital gains tax on any appreciated value. All proceeds directed to the strategic Bitcoin reserve. MetaMask rolled out native Bitcoin support. JPMorgan included BTC in its 2026 market outlook for the first time, and institutional holdings now stand at 5.94 million BTC, or 30% of circulating supply. On the cautionary side, spot ETF outflows reached 357.68 million on the 15th of December. The fear and greed index plunged to 11, signaling extreme fear, and the price sits 28% below October's all-time high. Ethereum leads the downside at minus 6.1%, but landmark institutional deployment arrived. JPMorgan launched its first tokenized money market fund on Ethereum, the My On-Chain Net Yield Fund, which seeded 100 million and opened to qualified investors. This represents a major step in legacy finance, deploying on-chain financial products. Bearish pressures persist. ETF outflows totaled 224.94 million on the 15th of December, with BlackRock's ETHA ETF alone losing 139.26 million and over 65 million bridged from Ethereum to Solana in the past week, highlighting ongoing capital rotation. Solana down 3%, yet regulatory and product momentum accelerates. Invesco Galaxy launched the Stake Solana ETP on SIBO, BZX, Charles Schwab added Sol Futures, CME introduced spot quoted Sol Futures, and Circle minted $2 billion USDC on Solana over the last 7 days, underscoring institutional rail expansion. Counterweights include a sharp drop in active traders from 4.8 million to 680,000 since the start of 2025, and market maker Wintermute reduced over 50% of its Sol holdings in recent months. Broader trends show institutional normalization is gaining speed. JPMorgan deploying on Ethereum, Visa forming stablecoin advisory teams, the OCC, Office of the Comptroller of the Currency, approving 5 crypto bank charters, and the DTCC, Depository Trust and Clearing Corporation, clearing tokenized Russell 1000 stocks. Huge. Global banking rails for crypto are being built fast. From Singapore to Switzerland, regulators are creating frameworks that let institutions hold digital assets with confidence. Australia is significantly upgrading its regulatory framework, enabling licensed institutions to hold and manage digital assets more like banks, with improved governance and consumer protections. The Solana Ethereum divergence widens. Solana boasts 657 million annual revenue, 98 million monthly users, and 1.6 trillion trading volume, 1.7 times Ethereum, with Firedancer now live enhancing execution. In summary, we sit in a classic capitulation phase, loss aversion paralyzing retail amid peak fear and technical weakness, while institutions quietly deploy at local tops on multi-year horizons. Poly market odds for Bitcoin to hit 100,000 by year end sits below 20%, with over 6 billion in liquidations clustered nearby. Yet the plumbing, bank charters, tokenized funds, and regulated products builds silently. Institutional adoption shifts with testing to deployment. Solana solidifies as the high-performance rail, and Ethereum anchors tokenized traditional finance, just amid short-term macro caution and sentiment extremes. That concludes your market update for the 17th of December 2025. Remain calm, zoom out, and stay informed. See YouTube and Spotify for more information. Thank you for listening to the Leap Podcast.